Good evening. Welcome to the Finance Committee meeting of June 20th, 2024. I am Vikram Chabra, the chair of the Finance Committee, and I recognize that we have a quorum, and I call this meeting to order. The first item on the agenda is to accept the minutes of April 11th and May 20th. We do not have the minutes ready for April 25th, so even though the agenda mentions so, we'll just go through the minutes of the 11th and the 20th of May. Has everyone had a chance to review the meeting minutes of those two dates?
Yes.
May I get a motion to approve them?
So moved.
Second.
All in favor of the motion, please say aye.
Aye.
All against, please say nay, and the motion passes. We shall review April 25th at the next scheduled FinCom meeting. We shall now go to the next item on the agenda, which is a presentation by Bartholomew and Company. If you could, sir, please come. I'm good. How are you?
Hi, thank you.
Yes, thanks so much.
Oh, okay.
Alrighty.
Thank you.
Got it.
Good evening, Mr. Chairman, committee members. My name is Chuck Patterson. I am Senior Vice President of Bartholomew and Company. And as a side note, I was a previous treasurer here in Shrewsbury. So it's been 22 years of being out of town. What Bartholomew manages for the town is its operating funds, its trust funds, some bond funds, and the OPEB. The operating fund will be, I'll go over that, and then I'll turn the OPEB over to Kathleen. As far as Bartholomew in itself, we are celebrating our 30th year, and we manage about $4.4 billion in assets. Of the 4.4, about 2.9 billion is city and town money. So if you don't mind, I'll get into the presentation on the operating fund. And then, Mr. Chairman, feel free to ask questions or however you wish to run the meeting.
Of course.
So the operating fund falls under Chapter 4455. What that means is it has to be, the mantra that we say as treasurer is safety, liquidity, yield. You cannot own stock. You have to keep your duration very, very short, meaning your average maturity. And you can only buy corporate bonds, treasuries, agencies, and bank CDs when appropriate. So as you can see here on page 2, on the left-hand side, that's as of 5/31. The town in this account had $77 million, and last June 30th there was $84 million. You go down on that same slide, you'll see the breakdown of where it's being invested and the yields associated with them. If you go to page 3, you can see that this account was opened up in November of 2001. So it has a long life. Since you can only invest things with a very, very short duration, you're not going to see, and only in buying in fixed income or bonds, you're not going to see this thing grow. It really can only grow by the interest that you earn, unlike when Kathleen goes over the OPEB. So as you can see, through the years, there's been $109 million put in, go all the way down, and you see that it's made over $15 million, $15.5 million. I will point out that you see in that column 12B1 credits. That was an error at the broker-dealer level. You do not pay 12B1 fees. So they inadvertently charged it, and then it was rightfully so given back to you guys. So as you can see in the chart, which I like, you can see the inflows and the outflows. The blue line is the market value, and the brown line is what the town has put in through the years. When you go down to page 4, this really tells you how the account's being invested, since it's all invested in bonds. So when you look on the left-hand side, you'll see under total costs that we bought $75,490,000 in bonds, but they're going to mature at $79,615,000. That difference will show up in the town as realized gains, okay? We're not buying things for current yield or coupon. You know, you see everybody, all right, what are you getting at the credit union? Oh, we're getting 3%. Because cities and towns don't pay taxes, we don't have to worry about that aspect of buying bonds. So if you go over to that same page on the right-hand side, that you see average YTM, yield to maturity. That's the number that can be attributed to that delta of those two numbers I just stated. Then you go down to average coupon. So the average coupon is 2.1%. There's your delta. So in this account, if you were to say, how much is the town making on this money? It's 5%, okay? The average duration, average maturity, again, because of state law and what this money is, we have to keep the duration very, very short. And then you can see the Moody's ratings, they're all A+ or better rated.
So, Mr. Patterson,
Sure.
on page 3, what exactly, in the left column, what do we mean by a realized gain or loss? Because the interest is what is being earned on the account, correct? So how do we realize gains or losses as a result of this?
Okay. If you look down at page 4, you'll see in the total cost area, here's your example, and I can show you when we get into the real detail. We bought $75,490,000 in bonds. They're going to mature at $79,615,000. That difference will show up on the books of the town as realized gains.
So then why is there a loss on page 3 then?
Going back to 2001, Vikram.
Oh, 2001, I see, okay.
Yeah, so over that time frame, it must have been we needed to create cash for withdrawal, and at that whatever we could go back and look specifically, but my guess is at that time we would have had to have sold something at a loss because of the timing.
Understood.
Yeah, but to that point, it could have been. I'm not sure when it was exactly. It wasn't this fiscal year, as you can see on the right-hand side. We've only, realized a small amount of gains, but that's what it would have been.
I understand. I should have been focusing on the right-hand column. I see.
Oh, that-
Mr. Mayor, one quick
Rajesh.
question on page 2,
Yeah.
just clarification, education purpose. So is there a set formula to invest in these asset subtypes? Like why we invested like in corporate bonds, when treasury bonds are maybe yielding much more since pandemic?
Okay.
Yeah. So the investment team really, so because of the legal list, there are only, as Chuck said, we can only buy a certain, not even just corporate bonds, there's a certain list of corporate bonds that we can buy. Treasuries, agencies, CDs. And so at any given time, the investment team will just look at what the most attractive opportunity is. And so over the most recent time period, the corporate bonds have had the highest yield to maturity, and all the corporate bonds as well are all BBB and above, so they have to be investment grade or above. So we can't buy any, junk bonds or anything like that. So at any given time, at times we've had more treasuries, at times we've had CDs. We don't actually own any CDs at this point. So it really just depends on what the investment team finds the most attractive, but they always, we would never own 100% corporate bonds because they're less liquid, for example, than treasuries. So they try to manage, diversification and the best opportunities at that kind of, but there's no law really around, Chuck can explain that better than I can, but there's no law around, you have to have X amount in corporate bonds or
Oh, okay.
that.
Which sends us right over to page 9 and 10, and those are your actual securities. All the securities that you own are on the legal list. We use the legal list here in Shrewsbury as a guide for these monies. Okay. Talking to Mr. Magardo years ago and myself, and Tom Scanlon, the auditors, we determined that this was the best way to make more money than just leaving in bank CDs. So, to your point earlier, so that first corporate bond, Duke Energy, if you look under the principal column, you'll see that we bought that bond for $5,162. If we were to sell that bond today, or May 31st, we would have had to realize a loss, and we'd have to sell it for $5,124,000. But if we hold it to maturity, which is going to be September 15, 2025, we'll get the $5,435,000. So depending on the time of its life, bonds will go up and down. And if you recall, in 2022, the Federal Reserve raised rates very aggressively. So what you would have seen in this account, you would have seen unrealized losses here because the interest rates went up quickly while you own lower yielding bonds in this account. When I was treasurer at the time, to Kathleen's point, this account had no corporate bonds, 100% agencies and treasuries, because at that time, agencies and treasuries were 6, 7, 8, 9%. Okay, so there's no, it's where the best place is. And in 21, I think, we probably had a fair amount of bank CDs. So when we do own a bank CD, we make sure that we keep that under the $250,000 limit, once again, to protect the town.
Good question on the overall allocation. You mentioned safety, liquidity, and yield is the
Yep.
focus. And just looking at the breakdown on page 2 of where assets stand now, money market funds paying the highest yield, which might be argued is a very safe place, with the weighting very light there compared to corporate bonds and treasury. Is there a reason for why that is light now, and what is your expectation of where rates might be going forward with?
Yeah, so to Chuck's point, current yield isn't, for the money market, it's a perfect representation, but for the bonds, it's more, a little more complicated with the realized gains and losses. But to your point exactly, we have felt, even though it's taken way longer than we thought it would, the Federal Reserve will cut rates eventually. It was supposed to be 6 times this year. It might be 1 time this year. We think maybe 0 this year. So the money market, though, is really, for us, it's not an investment, because ultimately, if the Federal Reserve cuts rates in probably not July, but let's say the end of this year or early next year, the money market is the first thing to go down. And so our thesis on that really is trying to hold on to higher rates for as long as we can. We think we're at the peak now. There was a little bit of talk internally of, do we think rates will rise again? A couple months ago, we were concerned about that, not so much anymore. But the reason for that is that we just don't want to be, we want to take advantage of higher rates while we're really at our peak. And so we try not to have too much in cash generally, unless we're told by the treasurer that, she needs cash for whatever reason.
And we've seen this cycle before, correct, where you've seen money market rates at local banks go up fast. They stay, and then next thing you know, something happens in the market and the rates drop. And it happens where bank money markets can be returning in that short time period higher yields than a fully invested account. And that's the situation.
Sure, and I understand. I guess the question also then to tail off on that would be, is the duration on this portfolio as long as it can be as it stands right now, if your expectation is that rates will come down, that they'll benefit more by that change in rates?
Correct.
Okay.
So again, in this account in particular, because of the law that it has to follow, you probably, and logically speaking, in the, say, trust fund account, you would be 100% correct that we'd begin to push duration. But because of what the funds are, you really can't. You really can't. But you are 100% correct. In the other accounts, we'd be pushing duration to maybe 3. And that's what it would be in some of the other.
What is the maximum duration by the law that you can go to?
There is none. I shouldn't say that.
No, I mean for these
for this,
accounts.
You're at it. You're at it. Because what it says is that the law, 4455, you can buy CDs for up to 3 years. You can buy agencies and treasuries for 1 year. It's physically written in the law. So how you get around that, it is from the date of from the date of purchase to the date of maturity. So it's physically written in the law that on treasuries and agencies, it has to stay within that 1 year window. So that's why you have this number here. And that's why we're saying we could be pushing it, but we know what we're buying as far as the risk.
No, I was just wondering what the number is.
It is.
So there isn't a lot of room to move.
No, it's
And you
3
wouldn't want to
years.
put a lot into CDs because
Correct,
you got to split them up at $250,000 a piece across
correct,
however many banks.
correct. So CDs 3 years, these 1 year. So we're managing that duration with the approval of the auditors and saying everybody knows what's going on, because we know what this money is. You want to make and capitalize on the amount of money to make as much money as you can.
So my follow-up question on that note. So like some of the corporate in the listing, so like J&J, you have 27, BMS 27. So maturity date. So what? So you just wrote. Is that the actual maturity date?
Yes.
And then the coupon rate
Yes.
is based on that date.
And that's why I was just saying that this account is very unique, that if you followed it correctly, it should be 1 year. But the auditors, and it's been like this for 40 years. So, yeah, if you want to follow the specific law, you're stretching duration a bit.
Thank you.
Okay. You know, and, yeah, we could shorten it down, but I'm not thinking with knowing what this money is, we would all be happy with its outcome. You know, when interest, granted rates right now on the short side are paying 5%. Well, we're happy. But when interest rates were at 0 or 25 basis points, we needed to seek that duration extension to get the return that the town needed. But that's why safety and liquidity and what we're buying is so important. You know, when you're buying the agencies, buying the treasuries, buying, you know, good corporate bonds that everybody knows. I'm not thinking, I hope and pray, that none of these large companies are going to default on a bond. If that happens, I think we have bigger issues than
Could I just
Don't-
ask one follow-up on, do you ever get callbacks on those bonds?
yes.
You do.
Yep, and sometimes it depends on how they're issued. And it's how the bonds are set up. And we may intentionally buy a call in this account. But it all depends on what the market's doing. But there are you know, 1-year calls, they could have an annual call, but yes.
Because most of the corporate bonds you got listed here, I would say, what I can say, be for expansion type things that they were investing in. So if they got a better deal, they'd say, well, sorry.
And when they do that, in most cases, in the sale, we know whether it has potential for a call. And it will actually say in the issuing document whether though that particular bond can be called or not.
Yeah.
If it will be an annual call, if it will be whatever.
Yeah.
But we are very aware of how it's being issued.
Yeah.
And then, you know, you may not want to call. If you think, depending on where interest rates are going, you may not want to buy a call. You may want to buy a regular maturity that's going to mature, and you're going to guarantee that income for the life of the loan.
So are these calls basically similar to derivatives? Aren't they a little bit risky, if so?
I'm sorry?
When you mentioned calls, are they derivatives that we're
No, so
investing
what
in?
would end up happening, no different when the town issues its debt. The town can refund a bond after 10 years. These companies can do the same thing, but they have to spell that out
I see.
in the prospectus that comes out, no different than when the town issues its debt. And so we know upfront when we buy it whether there's a potential of a call. And depending on where interest rates, where we think they're going, we may not buy that. Because if interest rates are going to start to drop, as Gene alluded, well, why do we want to lose a higher yielding bond if interest rates drop? Then now we have to go out and reinvest at a lower yield. So it all depends on at the time when we purchase. And because we have such a critical mass, when we put a bid out, when we're bidding out hundreds of millions of dollars, we get better execution. So we're getting the very best price when we put it out onto the market.
One follow-up.
Sure.
Just following up again on the law and the 1 year. Obviously, we're not adhering to the law on every bond we buy. So again, it comes back to how far out would you want to go? Because if you're buying 27s, 29s, 30s, that's not 1 year
Correct.
maturity. So you can buy that. So again, it comes down to, my question is, what is the longest duration that you can go to and that you'd be comfortable with?
The longest, even in a trust fund account I've ever seen would be 6 years, would be our
Okay.
max.
We're not buying 30-year bonds.
Right. Oh, yeah.
No.
But it's kind of going back to colleague Brian's point of, you know, would it be worth doing a little bit longer? And what goes into your investment committee when you make that decision?
It's, certainly you look at the credit, you look at
Yep.
the company, okay? Then you're going to look at the town itself, okay? What are your cash needs? So we don't want to be put in a position where we have to sell something inappropriately at a time that lost value. So, like Kathleen said, if 6 years, that's probably long. I know that, as you can see, 5 years is a good number, but that's the longest we go.
Okay, but you're thinking interest rates are going to go down. Does it make sense to be a little bit longer so you get the higher interest rate?
Maybe on the trust fund account, but again, coming back to this account, this is a unique account.
I understand that, but again, here on one side, we want to be within the 1 year thing, but, you know, unless my eyes are lying to me, I see that we're not.
You're not.
So the question is, if you're willing to take that risk, if you think rates are going down, would you want to take a little more risk? I guess the answer is no, but.
I would say depends on the security. I would say in most cases, the answer would be no. You know, how much more risk do you want to take as far as duration?
And what level of risk would you put this at right now? If you,
As far as,
Low, medium?
as far as this account, I think, it's probably medium.
Okay.
Probably medium, for what this account is. If I'm talking about the trust fund account, where I don't have that restriction of the duration, I'd be low.
Okay.
That appropriate?
Yep.
Yeah, if it's a trust fund account where I don't have to worry about the duration, and, this money here can be used by the treasurer. So for instance, if you see this year, they took $10 million out. Okay, so that's what this money is. This is your excess money that, you're making more than leaving in the bank money market account. And that's how it's always been used, whether it's mine.
Although in this
myself.
case, I'd argue we made more in the bank money market account.
And today, yeah, and we talked about that, in this real world right now, where you have an inverted yield curve, yeah. And that's
And how long has the curve been inverted?
longer than anybody expected.
Right, that's my other point. It's
You know,
been inverted for a very long time.
It has.
And it's not normal, right? No one has seen a yield
It's the new
curve.
normal.
No one's seen an inverted yield curve for this length of time.
Is it even still inverted? I think there's no.
Should have had a major recession if you believe the pundits at that point that said inverted yield curve is within 6 to 8 months, you're going to have a major recession. I think that was the mantra at the beginning of this crazy world we're in. Any more questions on the open?
Rajesh?
Yeah, so one quick one. So with this money, like 5-year bond or whatever, so if town needs the funds.
Yep.
So apart from the value change, market value different delta, we're not paying any penalty, or a town is not paying any penalty.
No. It's unlike a bank CD, where if you had to break the CD early, you'd give up that interest.
Right.
It's, as you say, it's simply market. And then what we would do is we'd go to the treasuries first, sell the treasuries, and then find out what other bond is in the money. Also, it comes back to the communication that we have with the treasurer and Amy and previous treasurers. Okay, what is the town manager's plan? Or, like, for instance, teacher summer payroll is right now. Okay, how was the money in her other banks? Did she need money coming from here? So it's all of that constant conversation we have with the treasurers, whether it's here or elsewhere, to make sure that we don't have to sell something inappropriately. And then what ends up happening is, on the bottom page of 10, you'll see the money market accounts. Okay, so when the treasurer says, okay, I'm gonna need, $5 million on July 1st, we'll stockpile money, particularly now, into that money market account because it's paying higher yields. And then when the treasurer calls us up, okay, I need $5 million, then we can send it out. So it's that communication that we have with our treasurers to make sure that you don't have an inadvertent sale, which would cause a loss.
Thank you.
Milind?
So, couple of questions. How many times do we rebalance this account during the fiscal year?
In this account, I would say because it's essentially a ladder, so we constantly have things maturing. It's constantly being rebalanced. We're not, the OPEB, when we talk about OPEB, it's a little bit different, but in here, every time something matures, they're looking for the best place with the restrictions that we have where we can buy. So it really is kind of it's a constant process. That sounds like a kind of a cop-out answer, but the only other rebalancing that would come in is if we looked at, McDonald's, for example, and let's say they got downgraded, and they were no longer on the BBB or above. That's when we may intervene and do something, but otherwise, because things are maturing, it's a shorter ladder. We're kind of constantly doing that, if that makes sense.
And then is there a specific reason that we are following like a US government credit benchmark? You know, I mean, if you see our asset allocation, it's more than 50% in corporate bonds, and this is like primarily US government benchmark. So is there another benchmark that we can track against?
Yes, so we look at a lot of different benchmarks. We can always show whatever, if there was a specific one, we can show it. For us, it's hard because of the legal list, we try to show kind of as generic as we can be in this 1 to 3 year time frame, which is typically usual, I would say, especially for this account. We try to show something that sort of encapsulates government and credit, but we look at every benchmark. We can always provide that. It's just a generic, kind of all-encompassing benchmark that we use.
And where this account, for all intents and purposes, cash. Very, very short. And to your point, when you look at on page 6, your portfolio over on since inception number has generated a time-weighted return of 2.13. But if you left it in a bank money market account, the benchmark that is representative of that is a Bloomberg 1 to 3 U.S. Treasury bills. So if we did not invest it the way we are currently managing it, the town would have made 1.49%. So to address your concern, okay, yeah, we could have left it in money market, but long-term, by investing it, it's done better. So for instance, if you look at the 1 year number, to everybody's full knowledge that, you know, the treasury bills for the 1 to 3 month treasuries, they paid $5.51. And then the account's done $3.31. It's in that short window, that 1 to.
I'm not saying you should have left it in money market. I'm just saying
No,
you're
but-
taking extra risk.
Yeah,
You know, you're not in money market to make more
Right.
overall, long-term, but you think the interest is going one way, you were willing to take extra risks by going a little bit longer. You could have done just as well by going shorter into the treasury, or actually better,
We would have done better.
so. And I guess that's what we're paying for, is you guys do better.
And again, it's a window in time. No one would have thought that our markets would have done what they have done in the last 6 months to a year.
I don't know, the government's pumped a lot of money into the economy. There's nowhere for that money to go but the markets. So,
True.
Out of
it happened in
curiosity,
2008.
the management fee as a percentage seeing as the expected returns are low, what is the management fee as a percentage of the
I-
account?
I believe you're at 17 basis points.
Okay.
And what we do is we take a look at, might even be 16 now. It fluctuates depending on how much the value of
Quarterly
all
assessed.
of
Yeah.
all the accounts.
And these numbers are after fees, right?
Everything's after fees. So it's 17, I think, and that includes, I think you guys have all heard my spiel of who we are. So that not only pays us, pays all the ticket charges, all the costs of doing the trades. It pays Commonwealth Financial, which is the broker-dealer, and it pays National, which is a subsidiary of Fidelity, and they're the custodian. So that's where all the funds are. They're at National. So that 17 encompasses everything for everybody.
Quick question. Just, Chuck, on the 12B1 credits, granted that number is tiny, are we sure that was just this year?
It's
This
not
past-
going to be. They made a mistake, and it will be again next year.
Okay, and when they purchase it back in, is that a one-time, are they doing it as of, or how was that purchased back in?
They just gave, so it was charged.
Okay,
They identified the charge, and then they immediately put it back.
oh, I
it
see,
was charged on
okay.
the money
I
market
got
It was
of
on
all
a money
things.
market
Yeah,
account.
and
It wasn't necessarily on something that you would have seen. It was part of a charge that they put on, and they fixed it, and it was across all accounts, everywhere. that because of a relationship that all the cities and towns have, they don't pay commissions. And 12B1 is a commission.
Thank you.
That's why it was accredited back.
Milind?
One more thing, is there a way to get like asset allocation of a benchmark that we are tracking against?
Yeah.
Yeah.
Yeah, we can do that, sure.
All right, we'll send that to Amy.
Yeah, that'd be great.
And then, as discussed, the other benchmark detail, if you are able to send it across, that will be.
Was there a specific benchmark?
No,
wanted to
which
s-
has
oh, okay.
kind of mix of corporate bond, you know,
Yeah.
because we are 50% invested into that, so.
Yep,
Just wanted to see
something that
the
we're.
closer that we
Yeah.
get to, I
Yep.
think it's better comparison.
Yeah, we can do that.
It's short-term corporate bond.
Yeah.
Yeah, and again, it would be, we'd have to kind of find a, you know, it's investment grade only, so we can, we can find something that gets us close. Again, legalist is very restrictive, but we can get something close.
And when you look at the companies that you can own, there's only 22 that you can own. And they have a issue of concentration. 1/4 of the legal list is drug companies. So Mass Collector Treasurers and the governor just signed a new law that's going to allow cities and towns to invest their trust funds, not these funds, in a prudent way. So rather than stay with the 22 stocks, you'll be able to go out to the broader market, which is a good thing.
Yep.
And so it's a good
Oh,
thing that
I'm
happened.
glad to hear that. I was going to ask that question because I know we had discussed it quite a bit
Yeah.
last year.
It was
so.
signed August 8th by the governor, and good thing. There's a lot of towns that are bringing it to town meeting. What would have happened, you may recall, it had to go to town meeting first, then into Boston. Well, Boston's been taken care of. So now all the towns in the Commonwealth are making those determinations. So it'd be on your cemetery, your library funds, you know, that, your trust funds. So it can't be the other town funds. So you're seeing a lot of towns jump that way. And then what they're doing when they do so, they change the asset allocation to now a 60-40 split on those particular funds, because they can take on more risk.
So I guess a question for the town staff then, is that something we're planning to bring to town meeting?
Most likely the fall town meeting, or, yeah, if we need more time, but yes.
Okay, so either the fall or next
Next
spring's
April.
town meeting, okay.
And you're seeing right now, we have, there was a handful that jumped into specials in September, October time period. It might be, I think we got probably about a dozen towns that either have done it at their annuals or will be doing it. And then you're seeing a bunch coming through at the specials in the fall.
Gene, you had a question?
Just one quick, so those management fees on page 3, is there any additional fees listed in here that add to that, or is that the total?
That is the total.
That is the total. Okay.
Okay, so all the ticket charges,
Yeah,
all that
okay,
other stuff,
okay.
all.
I didn't know if there was anything else.
Nope.
Mm,
And you would have seen it, that was a 12B1.
Yeah, yeah,
And they
okay.
gave it back
Yeah,
to us.
okay.
Milind?
One more curious question. Do we also track against Morningstar category?
So in this account, because it's just bonds, not really. Not really. We use Bloomberg internally in Thomson Reuters as well. But so Morningstar would be more on like the OPEB side, on the equity side. But for bonds, no, they look more at Bloomberg and Reuters. Yeah.
Thank you.
Yeah.
All right, I'll switch it over to the OPEB account. Now, for those at home, this is OPEB, other post-employment benefit. This is for the unfunded health and life insurance liability. So now this is being managed under the law the Prudent Investor Law, 203C, and that means it can be invested in pretty much anything. So with that, I'll turn it over to Kathleen.
Great. So on page 1, you can see, of course, the total assets of the OPEB as of the end of last month. So about 10.97 million at that point. On page 2, we show, some people like this, some don't, but this is really trying to give you a visual representation since 2011, how the allocation has changed. So very different from the operating funds. This is fully diversified, it's prudent, so we have domestic and international equities, domestic and international bonds, some alternatives. And so you can see over time, the equity portion, for example, has grown, and that's with our recommendation and collaboration with treasurers. This portfolio stands at a 70-30, so 70% equities, 30% bonds, and there's a sleeve of alternatives in there as well that we'll talk about. But that's, you know, very appropriate for OPEB. But really, we point out here just to keep kind of in mind that it was a little more conservative in the beginning, and we're now sitting at this 70-30 place.
And I believe the treasurer and Kevin changed the asset allocation to 70-30 last year.
So when we say 70-30, that's bonds versus
Equity 70, 30% bonds.
30, the other
Yes.
way around, okay.
On page 3, similar layout here. So on the left-hand side, you have since inception. So this account opened in 2011. And so you can see all of that same information, contributions, withdrawals, realized and unrealized interest, management fees, that, again, that 12B1 commission and credit occurred in this account as well. So an annualized return, net of fees, of 5.51%. I would say, you know, we're happy with that. I think with the 70-30 with private equity and real estate, which we have, our target's a little bit higher than that in the long term. But, you know, all things considered, that's the big picture, and it's quite good, all things considered, since 2011. On the right-hand side is the fiscal year. So far in the fiscal year, we're almost through it, but the portfolio is up 10.24%. And you can see at the bottom there, I like the visual graph. OPEB, of course, is taking on much more risk than the other accounts. And that's, of course, it needs to grow. It needs to hit the unfunded liability. And so visually there, you can kind of see some of the volatility, but the growth really over what's been contributed into the account, which is, you know, really what we're looking for. Page 4, to the point of benchmarks, this is a much better representation, because here this is a prudent account, and so we really can invest in anything, and so we can have these much better blended benchmarks that really represent what we're trying to do. So you can see the Shrewsbury OPEB is that top line, and your best benchmark, your most applicable benchmark, is the third one down that says 55, 25, 20 equities, bonds, and liquid alternatives. We include some alternatives, including private equity and real estate, and some other alternatives as well, commodities, things like that, that really are there to help smooth out the ride, but they also are there to help returns over the long term. So your actuary, for example, when they're calculating projected returns, they're looking out 30 years. And so for something like private equity, the return is a much higher projection than public equity and, of course, bonds. And so owning those things really should help in the long term. And so Treasurer has been great, and we've added all of that. So
What exactly are alternatives?
So the kind of simple answer is that alternatives are anything that isn't a stock or a bond. So in this portfolio, you own some real estate, some private equity, so private companies, and then we have a basket of managed futures. So that would be, for example, it could be oil, it could be coffee, you know, commodities, things like that. So it's really, it could be Bitcoin, we don't own that, but that's an example of, you know, it could be anything that essentially isn't a stock or a bond. And they really, alternatives behave differently than stocks and bonds. And so over the long term, they really can help. And I
Follow
can
up,
point
follow
those
up on
out.
that
Yeah.
alternative. So is it the real estate, is it commercial or like residential,
So it's mostly industrial.
industrial?
Real estate. They have multifamily real estate as well. There's nothing, I shouldn't say nothing, they may have maybe 1% in retail, around that same amount in office, but the majority is industrial and multifamily.
So how are they managed? Are they in the open market alternatives, or how do
Yes.
you actually?
Yeah, so
handle it?
good question. So these are all, the ones we own are still all what we call 40 Act funds. So they're all still mutual funds, the funds themselves. And so they aren't daily liquid. So everything else we own, we can buy and sell every day. The private equity and the real estate is either monthly or quarterly. We can buy or sell it. But so the fund itself is on the open market. What they own would be on the private side. So not, publicly traded anything really.
And
Does
you
that make
can,
sense?
you can see the actual funds
Yeah.
on page 6 in the alternative section.
The liquidity on those funds can be limited, though, if there is something that the board doesn't allow
Correct.
within each one
Correct.
of
Yep.
those. But you're buying them hopefully with the expectation that these are long-term holds. Is
Yeah.
there an expected time frame that you would say you do anticipate holding, be it the private equity, as an example? Is there a time when you would pare that back, or what are your expectations there?
Yes, 100%. So we talk about this a lot. There's one fund we're, thinking about paring back at some point, just because it's gotten so large. So we talk about it a lot. The intention, of course, to your point, is to own it over the long term. But if we were to do that, it would be because either the allocation has gotten way out of whack. So in 2022 and even right now, those funds are doing really well, and we don't want to own more. We don't want to own 40% private equity. So we'll, as things go that way, let's say the market is really strong, we'll pare some of it back. And if we have a situation where we want to get out of one of these funds, we'll do that as well. But we've diversified them a lot. We've added, we have quite a few.
Yeah, I see AMG Pantheon. It doesn't have a ticker symbol. Does that mean that it is not actually a mutual fund, but it's maybe more of a limited partnership or something like
It's
that?
still a mutual fund. It just doesn't, you can still look it up, but it's still a 40 Act fund. Yeah, yep. Yep.
Gene had a question.
I have a,
Oh, yeah.
just a quick question. Does the town get involved at all in any of these selections as far as percentage goes? Like, you used the phrase smoothing, okay? Does the town have any input that we want to get a 5% return or a 6% return? Does anybody communicate from the town back and forth to you on that? Because on our retirement funds, we smooth all the time on there. We have for the last 25 years. We've had a set percentage, and that percentage stays the same. But the market could be up and down all over the place, but we maintain that on there, so.
The answer is yes. What ends up happening is not only do we meet with you guys, but we also meet with the treasurer and Kevin. And the town has an investment policy statement so that we manage inside a minimum and a max, and we have a target. And then that's where the smoothing comes in. So we're managing within the town's investment policy.
I've never seen that policy.
Yes, I've never seen it either.
Uh,
It would be great to see, like, how do we perform
get that.
against what our,
Is it not on the website?
I can see if it's on the website.
Should be there.
It should, I believe it may be on the treasurer's website.
You don't have to do it right now,
Yeah.
but I don't ever remember have discussed it,
Yeah.
that we had a policy that was in place, because you've actually just got, when you think about it, nothing against the manager and the treasurer, but there's two people really making hard decisions.
That is true. Right now, under the OPEB statute, towns will vote to make the treasurer the custodian, thus making the treasurer the trustee. That is the way it is virtually in every town in the Commonwealth for these OPEBs.
All I'm saying.
When they get bigger, I could see down the road where you could see towns change that, where you then now form an OPEB committee.
Yeah.
The issue when forming an OPEB committee, you must elect an employee, you must elect a retiree, you have a professional in your community, and it's the elections that everybody runs away from.
But we basically have similar things already within the town with retirement, okay? You have a committee that goes back years and years. You've got other committees that are making decisions on our retirement funds. You've got a committee. I'm just saying, some of these policies, I think, would go way back if you looked at the history of them. And now, today, it's a changed world, I guess is what I'm saying.
And I agree with you that down the road, I could see towns changing that. So, yes, the towns do have a determination. They start out with us and say, okay, just like Kevin and Amy have done, they moved the asset allocation from 60-40 all the way up to now 70-30. They do not get in the middle of that internal rebalancing from domestic, and that's all part of us, but that does show up on the investment policy.
Does the select board also get involved in this?
Again, no, that's not the way the law was designed. It's not unusual. That's, what normally happens is we'll come out, make a presentation, and if a finance committee or board of selectmen want us to come out and make a similar presentation, yeah, we do. But it falls, based off of the current state law, it falls in the hands of the town treasurer.
I had one quick question. How much are we paying in foreign taxes for all the foreign funds that we have, et cetera? Because I know since states don't pay tax, we're not gonna get a credit for that, but is it a,
It's negligible.
Minuscule,
Okay.
minuscule.
Yeah.
You might see it once a year, and if in an account of $10 million, if it's $100.
yeah, I was just wondering what it was.
Yeah, if it was $100, I'd be shocked, shocked. And that, and where you also see it is on the legal list and
Unilever.
Unilever. You'll see a small foreign tax on that, but it's minuscule.
Quick question on the management fees. So this is also so 17%
Yeah.
comes here too, right?
Yeah,
Across.
so what it is we look at the total relationship in the community. And I stand
Yeah,
corrected.
they're down.
I stand corrected. For the record, I stand corrected. You're at 12 basis points.
Oh.
I didn't realize that. So how it goes is under $2 million, it's 60 basis points. Then it's 5 basis points off, up to 10 million at 30 basis points. 20 million, you're at 20 basis points. And then for every 10 million after that, it comes down another basis point. So the total relationship with the town is in and around 100 million, which puts it at 12. And so I stand corrected.
Yeah, no worries, thanks.
Okay.
12 is the average through, or 12 is the top rate?
No, that you take all of the money put together and the calculation is done internally. So as you add money, all the accounts experience the lower rate.
It's not tiered at all.
It's not tiered.
Yeah.
There's some institutions that will say, okay, for the first 3 million, it'll be at 60, the next,
That's because you laid out a tier. That's why I was making sure. It's-
right. It's just how it goes down. but it's full dollars, back to $1.
And that's in addition to any of the underlying fund fees and things. of that
Correct.
nature.
And on all the funds, we're buying all institutional share classes. And then Kathleen's team, try to make sure that we are,
Could we
saving
save
as
on
much
fund
money.
fees if we went into things like index funds?
Have some.
Yes, yeah, and so we did that actually. One of your largest, I think it might be your largest holding, is if you look at page 6, this was a change we made somewhat recently. You can see September of 2023, we own an index in that particular, in growth, essentially it's large cap growth companies, because we found that active managers, once we did all of our quantitative research, qualitative research, said they just are not worth their expense ratio. And so that was kind of a big change for us because we really believe in active investing, but and in a lot of cases it works, in some cases it doesn't, so we sort of have a mix. And on the bond side, you'll see, especially right now, where we own just kind of index treasuries because we're making over 5%. You don't need to be creative with it. So we'll do things like that. So yes, the answer is, the underlying expense ratio would be cheaper if we were passive and index across the board, but we're hoping we can obviously outperform the index where
So-
we can, like I said.
That's great.
Yeah.
Follow up on that.
Yeah.
So to Milan's point on the how often or do you balance these funds?
So in this account, the bare minimum we do is annually, but it's much more than that realistically. So by IPS standards, it's annually, but it really comes down to whether there's a contribution, of course, that kind of triggers a rebalance, or if we have, once you see the IPS guidelines, we will rebalance if we have the targets and then we have minimums and maximums for each asset class. And so if something is out of that range, that's when we'll go in and rebalance and make sure we're back at target or back in the range we're comfortable with. So it's sort of ad hoc, but it's at least annually.
Yeah, follow up on that. So within that investment policy, does we anywhere lay out what expense ratio, the max we can afford when it comes to risk and expense ratio? Do we, or it just like never considered that?
I don't believe so.
We have never in our municipal world here, the investment policies have never gone that fine in today's world. Doesn't mean it can't, but again, OPEB being so new, there hasn't been a need. But again, like I said to Gene earlier, that doesn't mean down the road you wouldn't see that. But when you see the investment policy statement, it's very simple. It's really just talking about the asset allocation. But it doesn't mean that down the road you wouldn't get into a deeper dive as far as those types of issues.
Thank you.
Dennis, you got a question?
Just one question, when money is put in and you do the rebalance, is that a full rebalance or is it an opportunistic rebalance? We just fill in,
It would, most of the time, it's filling in where
okay.
proportionally based on the
Yep.
targets, if that makes sense. Yeah, it's, but, within that range, the team will sometimes say, okay, maybe we want, well, this is actually the case more recently, they've said, we want to own more, have a little bit more in domestic, less in international. So they'll adjust their internal targets, so you might be rebalancing to those, which are still in the parameters of the IPS.
Yep.
It's probably too detailed
No,
for what
no,
you're asking.
I was just, no,
but
just
yeah, it's-
wondering, so
It
if
is opportunistic.
you keep
sort of.
the turnover, as they say, limited when it's, just for new money
Yes.
coming in.
Exactly. Right.
And then to Kathleen's point about selection, they went out to bid this past year on their large cap value fund. So they actually wrote an RFP, went out, put it out onto the street, and they awarded it to JP Morgan. So because of our size, when we do things like that, people actually submit the bids, and now we can evaluate how their manager's doing, what do they say, and what versus what do they actually do.
We're good. Thank you.
All right, thank you, Mr. Chairman. Have a great night.
Thank you so much.
Thank you.
That was wonderful.
Yeah, thank you. Do you want some extras? Yeah, yeah.
Keep going.
Just to make one comment, I think this is a good time of the year to have a presentation like this when you got a little more time and get into it rather than in our.
All those
budget.
budgets and
Yeah.
articles that we have to go through.
Yeah, we used to come in during budget time. and Guys, you gotta take care of the budget. And so by having us come in, we love coming in, and, you know, if you have any other questions, please send them to the treasurer, and we'll get them right back out to you.
Yeah, we appreciate your time. Thank you.
Thank you.
Thank you very much. Thank you.
Right.
Okay, we can move now to the next item on the agenda, which is to review the reserve fund transfers. So, over to you, Alex.
Yeah. So the first one to review is a reserve fund transfer request through the accounting office for $3,500. And the purpose of this is to cover, we recently renewed our contract for our town audit fee, and the contract came a little bit over what had been budgeted, so that $3,500 just covers the cost of our annual audit.
This is additional fees or the entire cost?
The entire cost is about $45,000. So this is just the difference of what was budgeted for it and what is needed since we renewed the contract. So for next year, it's already been increased to meet the contract amount.
Diana?
Just a quick question. Is that a 3-year contract that we end up renewing, or?
I believe it's 3
It's a
years.
yes, yeah.
Okay.
Either 3 or 5.
Okay, but then we generally know, it was just this year we.
Correct, it was the
Because-
timing.
Okay.
It's a good question.
Motion to approve.
Second.
All in favor, please say aye.
Aye.
All against, please say nay. The motion passes. Alex, the next one?
So the next reserve fund transfer request is for the town council professional services line, and this request is for $101,402. This primarily is associated with the legal costs related to the appeal of the 1 through 7 Maple Ave planning board decision. So I can get you exact numbers of.
While you're doing that, I think we initially budgeted about 176,000 for legal services, and year-to-date, including the estimates that we've received from council for June, we're gonna be about 270,000, 276,000.
And how much of that, excuse me,
Sure,
question.
please.
And how much of that is related directly to the Beal?
Do you have those numbers?
Yep, about 120,000.
Okay.
So more than 60% of the initial budget for legal services has been dedicated to the matter at 1 through 7 Maple Ave.
And this number also includes we received an estimate from Miracle Connell for the remainder of June. So this includes actuals through, I believe it was June 18th, and then an estimate for the rest of the month.
Do we have a cumulative number of how much we're going to have spent on this particular litigation and till date?
So right now it's that $120,000 number.
It's all been all within fiscal '24 so far.
What about anything in 2023 as well?
Not related, not that was separated out and related.
I follow up on that, Vic.
Sure.
Do we know, is there an end in sight with that field project?
I think so. Do you have?
Yes, I can get an update in the timeframe. I do know that there was recently, they just finished some court trials last week or the week before, but they're going to be reviewing it, providing the minutes, but that in itself takes about 60 days, I think. So
Okay.
I'm hoping by the end of the calendar year, we have a really good answer.
That was gonna be my follow-up, Dave. So you think, could this go into next year, possibly, based on? It seems to
Well,
be-
obviously into next fiscal year.
In the
Yeah.
fiscal year?
All right.
I think
And there will be expenses.
worst
in that.
case, yes, it's
Yeah.
possible.
Sorry, just a quick question. So did we adjust the fiscal year 24 budget to plan for these anticipated additional legal fees?
FY '25.
Sorry, 25, yeah, sorry.
I don't think we did.
Okay.
You pulling that up now, or?
You can get back with the answer, it's
Yeah.
okay, sorry.
Okay.
These funds are for 24.
Yes.
Yeah.
Fiscal year.
Yeah.
The balance.
Fiscal, yeah.
Yeah, okay.
Yeah. And we level funded the town council budget for FY '25.
I think
Okay,
we're hoping to
so-
be done with the legal services.
But
Yeah.
we're probably gonna have a second one,
We
or a
may,
third
yeah.
one. We're probably gonna have two more.
So this is something we can obviously take a much closer look at and make a change if we need to at the fall special town meeting.
That's what I was gonna suggest. Can we, just bring it to people's attention that we'll probably be spending more.
Yeah, and this is a great use of the reserve fund in some regards, because
Yeah.
we're trying to not put more necessarily in that fund than we would typically budget, and then have that taken away from, the tax levy or other purposes, and, but yeah.
Could I ask one?
Sure.
What is the balance left now in the reserves?
So none has been withdrawn so far, so,
Yep, these are the first transfers, so if both of these pass, it would be about
So
250.
both of these in the 25 end, you're saying?
The first one that just passed, the 3,500, and then this 101,000, there would be a balance of about $250,000 in the
Okay.
reserve fund for FY '24.
yeah.
So in addition to the legal funds, is it possible to get some number in terms of what loss the town is incurring because of all these litigations, the additional loss of revenue or whatever expenses do happen?
We can definitely dig into that for sure. A lot of the probably initial loss at this point in time is going to be on the developer, unfortunately, but we can see if there's some numbers we can pull out.
We can't start collecting real taxes on that until the developer finishes, so there is a
Correct.
loss to the town.
But, yes, there,
And that's,
yeah.
that would be good to at least bring up.
Yes.
Now, again, if they win the suit, for them, that will be what they wanted, so that's fine. But, the town is trying to bring in revenue, and it'd be good to know what we're losing. If they lose the suit, what they're losing, because I don't believe we can recollect the legal fees on that either.
But they don't even own it. The town, we still own it, the town's
Yes.
using
Right, that's
it.
me, we can't
We can't
we
collect
have to
anything
pay
from them.
for whatever upkeep we are doing to it. Granted, we're not doing a lot of upkeep
Yeah,
to
no,
it,
but, good
but
point, yeah.
there is a cost there.
And the loss of revenue, the
Loss of
projected
revenue.
loss of.
Yeah.
Yeah, that's what I'm
opportunity,
saying,
yeah.
even though there is no revenue until they own it and they put the building up.
But on that follow-up question, right? So we do have some projections on what would be the revenue coming out from that mixed
Oh, yeah.
development, right? So that's all lost revenue, lost opportunity.
Well,
Or-
at least an estimate of it, right?
Right,
Yeah.
sort of.
Yep.
And then whatever the legal costs, maybe it would be nice to see a number.
I respect and appreciate that we don't want to overfund the legal thing, but I do, to Jean's earlier comments in some of our other meetings, I don't know how many people are watching finance committee meetings, so I do think, at least in transparency to town meeting, maybe it is worth making sure that we are projecting what we need each year in legal fees, even if that means it's taking away from other things, so that town meeting members are aware of the cost to the town of the legal fees.
Any other questions related to this particular reserve fund transfer? Otherwise, if not, may I get a motion to approve it?
So moved.
Motion to approve.
May I get a second?
Second.
All in favor of the motion, please say aye.
Aye.
All against, please say nay. The motion passes. I believe you're going to give a status of the revenues for fiscal year 2024, Alex?
Yep, so in the drive and handed out in front of you, you have a snapshot of Schedule A local receipts. This is through June 18th. And so you'll see these are performing very well. To date, we've collected $16,339,107. This has exceeded the FY '24 budget amount by about 3.7 million. And this, right now, we've exceeded FY23 collected by about 740,000. So these local receipts have performed extremely well this year, especially motor vehicle excise. We're already about $1 million over what we had collected last year in motor vehicle excise. So,
And even in investment income, we've done
Yep.
pretty well.
Is it more motor vehicles in the town, or is it maybe
I think some of it can be tied to like the Edgemere development, and just I think,
Yeah, like
after the
delayed growth.
pandemic,
Yep.
people purchasing newer cars.
Definitely more cars in town.
Any further questions or comments for Alex on?
Just one question. So we're 3 million, almost 4 million over what we were expecting. So that, overall, our budget, what we brought in this year, we actually had about $4 million more than we anticipated. Are we reducing the levy, or are we gonna keep that money and roll it into a reserve fund?
Yeah.
So this excess revenue will flow to free cash.
Okay.
That will be certified after the fiscal year ends. And then that will, as you know, we use free cash at town meeting, so that will bring up our free cash. And then for FY25, we did look at local receipts and did increase the anticipated revenue a little bit more than we have in previous years, just because it's a category that has been performing so well recently.
Is there a possibility to move it to some of the stabilization funds, like the override stabilization?
Correct. Yep, we are doing some override modeling, and intend to have an updated model by the end of this summer, and that would help us prepare any decisions we decide to bring forth to the special town meeting with the appropriation of possible certified free cash.
Gene?
Could I just speak on two things? Reference one with the modeling. Do you think that we could get into a more discussion at one of our meetings? I don't say tonight on there.
Of
What's,
course, that's a great idea.
this is gonna be projecting how we're going forward. And in reference to that $3 million, this week in the publication in the Telegram and Gazette, could you tell me the total of what's owed the town in back taxes from 2020 up until the present time? This is 2 pages of debt to the town of Shrewsbury. How much is sitting out there?
Yep, and you're referring to the article that for tax title collections, correct?
This is tax title, stormwater, water bills.
Okay, I can follow up. I do know that we are intending to have a tax taking filed by June 27th. And I can get some updated figures from the treasurer collector on that information for you.
You say tax taking, but that wouldn't be, you're not taking all this property.
No, not all
You can only
that.
do
That's
it
the
under
stormwater,
law.
water, sewer. I'll check into that as
Yeah.
well. Yeah.
I started looking through the numbers here, and I mean, they are big numbers. Some of these things go back 3 years. Some of these,
Yeah, no, I'd be happy to dig into that and provide a.
you could just find
Better
out what the
analysis for the
total is,
committee.
because that would be a nice chunk of money going into the reserve fund.
Yeah.
Well, presumably the stormwater and things like that would be into those funds, not the overall stabilization, right?
No, but what's basically happened is Stormwater's already used their money, and that money came from someplace already. It's already been spent, because some of these goes back to 20 and 21, according to this article.
Yeah, I'll make sure that I review the article so
Yeah.
I can speak on it better. But if they are utility rates, water and sewer, those themselves are eventually collected through the lien process.
Yeah.
Um,
Well, but
Yeah.
I'm more concerned with the big ones, like, real estate tax 7,900, real estate tax 6,900.
Okay, yeah.
That type of numbers, 3 years, that adds up pretty quickly
Yep.
per household that's listed.
Rajesh?
There's two different cannabis-related things, line item 2 and line item 9A. So 9A, we're expecting will be eliminated, right?
Correct.
We won't see it anymore further.
Yep, and you'll
Yep.
notice that the budgeted amount was 0, so we did eliminate that.
Right.
this year.
Oh, okay. And then the excise also, are we going to expect it to continue the trend moving forward?
The
We-
cannabis excise.
Line item.
Yep, 2, or,
3. Yeah, 2. Yeah.
yeah,
Two.
the 2.
Yeah,
We
that will
intend that will continue, yeah.
And what's the penalties like? We have like a lot of penalties and interest. Is that
These could be, I can dig into the more
but these
direct
are like one-offs, right?
one-offs, and it could be police department, it could be late fees for dog licenses or something along those lines.
It's a lot of dogs.
So was that
I
one?
believe it's parking violations as well.
It could be park mileage. I do think in the revenue manual, I'm failing to recall it all now, but we do try to provide a detail of all the items that fall within each one of the local receipts.
Yeah.
But it's a large category, and it's not often 200% of what we budget.
Right.
Thank you.
Thank you.
Any other questions or comments? Thank you, Alex. Thank you, David. Shall now move to the next item of the agenda.
Sorry, I just wanted to
Sorry,
make
go
a
on, Jim.
quick note to both Alex and Dave. I was just looking back at my notes. This is the first time regarding the transfers. We haven't seen anything from the fire department. So thanks for all your hard work on that. I know I've only been doing this a few years, but I think that's gone back 5 or 6 years plus. We haven't had any activity there, so nice job.
Yeah, no,
Thank
it
you.
was town meeting support and, adjusting their salary and wages, and I do know that Kelly Leahy and both chief and deputy chief have been keeping a very close eye on it this year to make sure that we're monitoring all of their salary, so, yeah.
Yeah, well
Thank you.
done. Thank you.
Absolutely. Thank you for pointing that out, Jim. Okay, we shall now move to the next item on the agenda. We need to basically authorize reserve fund transfers for the summer months. Alex, could you remind me last year what was the amount we authorized?
We did up to $10,000.
10,000.
Per single instance, correct? Yeah.
And could there be a multiple number of instances, or do we put a
So,
cap
for
on
example,
that?
that could be $10,000 to the accounting operating expense account, $10,000 to town council, like those two separate accounts.
But could we do it more than 2 times, meaning it would add on, is there a cap on it? Because I understood it was an amount that we had, and we could only transfer that amount, otherwise we need to call a finance committee meeting.
I think that was determined by the finance committee and what the committee itself felt was comfortable to have the chair sign off on by themselves.
Yeah,
And we're, at this point, I don't think we're predicting multiple. We may see a small amount, but I don't think we'd even be predicting more than 10,000 in total. Yeah. But I think that's up to the committee to decide how it can best manage the funds.
That was your total last year?
Sorry?
10,000 was your total?
10,000 was the total last year. I believe, I remember signing, I think, 8,000 last year, or did I do the full 10,000? I
It
don't-
was, I think it was just under 10, and it was actually, it was a town council bill.
Right, I remember that.
Yep,
Yeah.
but it was, I think, just under 10,000.
I mean, I'm comfortable with doing another 10,000.
Yeah, and that's a cap. We're not
Yeah,
gonna do
Yeah,
just.
it's a cap, but
Yeah,
we can always call finance committee together.
Correct.
Yep.
right.
I mean, it may not be a Thursday, be a Tuesday or Wednesday or whatever, but we could probably get a quorum if we had to.
Okay. So if 10,000 is okay, may I get a motion to, what would we call this? To authorize the chair or the vice chair for an amount of $10,000 reserve fund transfers during the months of July and August.
So moved.
Second.
All in favor of the motion, please say aye.
Aye.
All against, please say nay. The motion passes. It's time is coming to reorganize our committee, and the proposal is to postpone this till September, when we come back from our vacation time. Hopefully, we don't have to come again. Is everybody okay with that? Do they have any comment or question?
Nope.
May I get a motion?
So moved.
Second.
All in favor of the motion, please say aye.
Aye.
All against, please say nay. The motion passes. We shall now review the meeting schedule. The 18th of July and the 15th of August are tentative meetings. Hopefully, we don't have to have them unless there's some reason which Alex will basically then inform us, otherwise they're marked as tentative. Our definitive meeting is on September 19th, 2024. Any questions or comments on the schedule? If not, does anybody have any other business they would like to bring to the committee? Any?
I'll just make one comment. I wonder if we can think about going forward at town meetings and special town meetings to cut back on the number of zoning proposals going forward. I think it takes an awful lot of time and energy, and I don't think really the town meeting members have an opportunity really to understand them completely, my opinion.
I would agree that most of the town meeting members don't have the time to really understand what's going on and the details of it, but I'm not sure what the solution is. I mean, if there's a zoning change that needs to be done, you know, I would like, if there's gonna be a zoning change that needs to be done, that information gets out a lot earlier than even it goes to the warrant, that, hey, we're thinking of this proposal, so people can get involved. I would love to see less of them come through, because I'm not sure how many more zoning changes we can do, but.
We'd be happy to communicate this over to the town planner, and imagine the select board would be happy to hear your input and advice on this as well, so we'll communicate that to both.
Yeah. I do agree with Gene, there's too many, I'm just not sure what the solution is.
I guess I would maybe disagree slightly. I think it's fine to continue to think about and improve how we zone our town and continue to refine to ensure we're getting the growth that we want to have. So for me, it's less about the number and maybe about the timing and maybe the style of the communication to town meeting members to make it more layman's terms, so that it's easier to understand the purpose of the zoning.
Absolutely.
That's something we have heard before as well, so it would be great to reinforce it with that. Thank you.
And one thing I noticed during town meeting, the article on the signs, the neon signs, I don't think town meeting had sufficient amount of discussions as we had here in FinCom. So yeah, if we could have some opportunity, some ways, some solutions to educate, as Diana was saying, and provide more information beforehand.
Fortunately, the education time is coming to finance committee.
I
It's
agree.
being talked about, as painful as that may be, but.
But even like, you know, the slides that are shared at finance committee, that content could be shared even if they aren't able to, you know, attend or, you know, watch. Because I think that, to me, as things were explained in the finance committee, made a lot more sense than how I heard them being explained in town meeting.
Agree. That's very good feedback. Thank you.
Yep.
Does anyone else have any comment or anything they wish to share? If not, we shall now proceed to the next item on the agenda, which is the correspondence we received. We received an email from our state rep, Hannah Kane, regarding the fiscal year 25 budget update on April 29th, 2024. We received emails from Taylor Galusha, the communications coordinator, on April 30th and May 7th, with the town meeting member updates, number 7 and number 8 respectively. Then we received an email from Hannah Kane, our state rep, regarding House Bill 4707, which is related to relative to the Affordable Homes Act, dated June 7th, 2024. And we received an email from which was directly to the Finance Committee from Taylor Galusha. It was regarding the Stay Connected Shrewsbury update for June 2024. It was dated June 12th, 2024. Any questions or comments on the correspondence that we received? If not, may I get a motion to adjourn?
Motion to adjourn.
Second.
All in favor, please say aye.
Aye.
All against, please say nay. The motion passes unanimously. Have a happy summer, everyone.
Happy summer.
Thank you.
All right.